a year and a half ago, I was talking to someone and they was like, "Oh yeah, I'm getting a 15-year more. I'm getting a 15-year mortgage." I said, "Why in the world would you get a 15-year when the 30-year is 2.75?" And I think what we're seeing right now is just an absolute reset of mortgage rates. What are you seeing in the housing market, in rates, and what are you expecting going forward?
Well, everybody thinks that this market is dictated by necessarily just interest rates, and that's one of the great misperceptions about housing in this market. It is heavily driven by the Fed on interest rates, Fed moving higher. You're now at the highest levels that we have seen going back to 2008. But I point to this key chart right here. This is the Fed mortgage-backed security holdings versus housing prices in the United States going back to 2008. Does it look like there's a slight correlation here? Yes, it does. So the key thing here is the Fed was supposed to engage in the largest unwinding of its balance sheet in history this month, $95 billion. And what did they do over this last week? They increased their mortgage-backed security purchases, about $5 billion. So that's a bad sign. Because as the Fed is selling mortgage-backed securities back into the market, that's going to create some liquidity issues. That's going to create some interest rate drama. And I think that, you're starting to see the warnings. You're starting to see the fear. You got articles on CNN Business by some pretty reputable business journalists with headlines that say the Fed could crash the housing market. So it sounds like people are finally paying attention to the things that we have been warning about going back to not just March of this year. I'm talking back in 2021 when we first started started Monday Morning Live.
Yeah, I mean the move in housing has been crazy, and the funny thing is, the 30 years at 6%. That is not high. That is historically 6% mortgage is not high. All right, if you got a mortgage in 1982, right? What was your 30-year rate? 12%. 13%.
12%. I spoke to somebody the other day. He said that back in the early 80s, he got a 14% mortgage and he felt like he got it cheap. So here we are sitting sub 3. And now you've got this doubling, but again, the cost of borrowing going much higher. It is going to create reluctance. The question, though, Mark, is whether or not people believe that rates will remain higher for longer. So let's talk about that environment where you're seeing in the CME FedWatch 4.25s become the baseline now for later of next year. If you continue to move higher, are interest rates going to get up to that 10% level? Do you need to lock in 6.5% if you want to get into a house in the next, in the next year and a half? My expectations, I don't think it's going to get to 10, but I think you're going to see probably a move to 8 at some point. That obviously is going to impact the demand side of this. We continue to have a supply side problem here in the United States. We're still a couple million houses short for expected demand, but in this short period of time, which could be anywhere from 12 to 18 months, that's where panic sets in. People don't look out 10 years. People don't have that view. Kenny just talked about FedEx. If FedEx gets to 150, I'm buying it, but I'm not going to look at it for a decade. If I were able to get a cheap house right now, I'm probably going to buy it. I'm not going to worry about the price over the next 12 to 18 months. I'm going to be focusing on the asset appreciation on the other side of this out to say 2020, 2030.
Yeah. And I think that's an excellent point and an important point. And, maybe if I'm thinking about buying a house, what I'm going to probably do is buy an interest rate option. I don't know that is a really smart way. You can go out to Eurodollars and buy and set up an interest rate option and just basically protect yourself if you think rates are going higher. So that would be kind of my approach if I was thinking about buying a house in the next 2 years, and I want to wait out the housing drop. Right? If I buy an interest rate option now and then I wait a year and housing prices drop, I can exercise my interest rate option, buy that house on the cheap, and now I'm in a position to win. And a lot of people don't know how to do that, and banks will never steer you toward that. Banks will never steer you toward that because it's bad for them. All right, remember.
All right, Mark.
If